On January 23, 2025, the United States quietly crossed a line that would reshape global finance forever. It happened without public debate, without traditional media coverage, without congressional approval, but every major intelligence agency in the world noticed it within minutes. That morning, former President Donald Trump signed an executive order establishing the world's first strategic Bitcoin reserve, a national Bitcoin stockpile owned and controlled by the U.S. government. A direct declaration that Bitcoin was no longer just a speculative asset, it was an instrument of national power. But the real story wasn't inside the United States. The real story unfolded 7,000 miles away, inside the walls of Zhongnanhai, the headquarters of the Chinese Communist Party. Within 72 hours of the announcement, China convened an emergency Politburo standing committee meeting. 7 of the most powerful men in China sat down at a long red table, not to discuss trade, or military strategy, or domestic stability, but to discuss Bitcoin. Because in Beijing's eyes, this was not a policy decision. This was the opening shot of a currency war. For 75 years, America has dominated global finance through one mechanism, the US dollar. After the Second World War, the international monetary system was rebuilt around the United States. The dollar became the foundation of global trade, global savings, global banking, global energy markets, and global credit. More than 70% of international transactions still settle in dollars. Nearly 60% of the world's foreign exchange reserves are held in dollar assets, and the United States possesses the most powerful economic weapon ever created: the ability to cut any country, any bank, or any individual out of the dollar system. Sanctions have become America's strategic trump card, stronger than aircraft carriers, stronger than troops, stronger than missiles. No major nation can afford to be exiled from the dollar-based financial network that controls nearly every global payment channel. China has spent 2 decades trying to escape that dependence, and failing every single time. They tried to push the yuan as a global currency, but global trust in the CCP is low. Capital controls prevent free movement. The financial system is heavily manipulated, and foreign governments have no desire to rely on a currency controlled by a one-party state. Even after years of effort, only 2.7% of the world's foreign reserves are held in yuan, a rounding error. They launched the digital yuan, the world's first major central bank digital currency. But adoption outside China is virtually zero. No country wants a currency that allows China's central bank to track every transaction. They attempted to build cross-border payment systems, commodity exchanges, even Belt and Road lending programs denominated in yuan. But the world continued to choose dollars because the alternatives were worse. This is why Bitcoin mattered to China. It represented the one asset neither Washington nor Beijing controlled. It was neutral. It was apolitical. It was decentralized. And it offered something China desperately wanted: a potential exit from the dollar-controlled global order. But Trump's executive order shattered that possibility, because by declaring a strategic Bitcoin reserve, the United States effectively signaled that it intended to dominate Bitcoin the same way it dominates the global dollar system. This wasn't America adopting Bitcoin. This was America absorbing it. The White House claimed it was about economic innovation, but Beijing saw the truth instantly. The US was attempting to control the next monetary rail before anyone else could. They weren't treating Bitcoin like digital gold. They were treating it like digital oil, a strategic resource essential for national dominance. Trump's target was clear: acquire 1 million Bitcoin over the next decade. Corner the supply. Control the rails. Set the standard. If the United States controls the majority of the global Bitcoin supply, then Bitcoin stops being a neutral asset. It becomes an American asset. Another extension of US financial power. Another weapon in America's geopolitical arsenal. China cannot allow this. Because if the US controls the dollar and the Bitcoin alternative, China is trapped. They lose the old system and the new system simultaneously. They lose the current world order and the future one. In Beijing's view, Trump didn't sign an executive order. He detonated a monetary bomb. And that bomb forced China's hand. For years, China has been preparing for a world beyond the dollar, but their progress was slow, fragmented, and undermined by mistrust. Trump's Bitcoin strategy forced them into a corner. If China doesn't respond, they risk falling into permanent US financial subordination. China's leadership understands something the general public doesn't. The nation that controls the future of money controls global power. For the past century, that power belonged to the United States. But Bitcoin opened a door, a chance for a multipolar monetary world, a chance for China to weaken American dominance. Trump's executive order slammed that door shut. Inside the Politburo meeting, China plotted 3 immediate responses. None of them public. None of them announced. All of them strategically designed to counter the US Bitcoin reserve. First, China began assessing its own Bitcoin holdings, both known and undisclosed. Over the past decade, China has quietly accumulated Bitcoin through seized mining operations, confiscated criminal assets, and state-affiliated entities, while the total amount has never been officially released. Analysts estimate, even conservatively, that China controls between 150,000 and 200,000 BTC. Trump's executive order instantly turned this dormant asset into a strategic instrument. Second, China accelerated its efforts to globalize the digital yuan through bilateral deals, commodity trade partnerships, and national security alliances. Their goals shifted, not to replace the dollar, but to create a parallel value system capable of resisting US financial pressure. And third, China began exploring what the Politburo called a sovereign crypto, a multi-phase strategy designed to prevent the US from controlling Bitcoin's global distribution. What that strategy includes has not been publicly revealed, but intelligence analysts believe it involves a mix of state-backed mining, shadow accumulation, and international crypto alliances. This is the part the world hasn't fully understood. Trump's Bitcoin reserve wasn't about economics. It was about power. China's response won't be economic either. It will be strategic, geopolitical, and aggressive. Because for China, this is not a competition. This is survival. The currency war has already begun, even if the public hasn't. They rarely said Italiano. Two nations, one struggling to maintain global power, the other desperate to escape it, both now fighting for control over digital money, the foundation of the next global financial architecture. And Bitcoin, once seen as a technology for individuals, has now become the battleground for empires. This is only the beginning, and what China does next will determine whether the United States maintains financial dominance or whether the world enters the most aggressive monetary conflict since the collapse of Bretton Woods. China's leadership understood immediately that Trump's executive order was not just a financial maneuver. It was a structural challenge to the global balance of power. The United States had signaled that it intended to dominate both the old monetary system and the new one. And China knew that if it didn't act quickly, decisively, and strategically, it would be boxed out of the future of money before the race had even begun. The Politburo's emergency meeting marked the beginning of what Chinese officials internally referred to as the three-stage response protocol, a counter-strategy built not to compete with the United States, but to neutralize the US Bitcoin reserve before it becomes an unbreakable advantage. The first stage began immediately. A comprehensive audit of all Bitcoin linked directly or indirectly to Chinese institutions. Over the past decade, China has quietly accumulated Bitcoin through seizures, mining operations, bankrupt companies, arrested entities, confiscated wallets, and state-controlled exchanges. Much of it was held without purpose. Some of it was ignored entirely. But now, those dormant assets became pieces on a geopolitical chessboard. Reports leaked from financial intelligence officers suggest that China's Bitcoin holdings are significantly larger than previously estimated. Between state seizures, ex-miner reserves, and assets captured during crackdowns, China may control well over 225,000 Bitcoin, possibly more, if including national security accounts, never disclosed publicly. If true, China instantly becomes the second-largest Bitcoin holding nation behind the US, but Beijing knows that simply holding Bitcoin is not enough. They need leverage. They need stability. And above all, they need control. This led to the second phase of China's counter-strategy, the mobilization of state-backed mining operations. Many people outside the crypto world believe China banned Bitcoin mining in 2021. And on paper, that's true. But in reality, after the crackdown, much of China's mining industry simply went underground. It restructured, it decentralized, it became murkier, more distributed, and more deeply embedded in local networks. Local governments continued to secretly partner with mining operators. Energy providers quietly maintained relationships with miners because it helped them balance their power grids. And state-connected corporations in remote regions like Xinjiang and Inner Mongolia continued to run industrial-scale mining farms just without the public branding. These operations were tolerated because they provided strategic upside. China never wanted Bitcoin to flourish, but they also never wanted to abandon it. Now, under the new geopolitical pressure created by Trump's order, China began reactivating those networks. Not publicly, not officially, but structurally, harnessing hidden energy capacity, redirecting abandoned hydropowered facilities, recruiting companies through offshore and creating new mining clusters across Central Asia under Chinese corporate fronts. China's aim is simple. If the US wants to accumulate 1 million Bitcoin, China will quietly make that mission as difficult as possible by reducing global supply availability. This is not about price. It's about denying America the liquidity needed to dominate the asset. In a strategic resource war, scarcity is a weapon, and China understands that perfectly. The third phase of the response is more subtle, more ambitious, and far more dangerous for global financial stability: the construction of a parallel settlement rail outside US control. For years, China attempted to globalize the yuan. It built currency swaps, payment networks, commodity exchanges, and cross-border lending pipelines. But adoption was weak, trust was low, and most countries still preferred the dollar because it was more stable, more open, and more liquid. Bitcoin changed that equation, but not in the way the crypto world imagines. It's not that Bitcoin replaces the UA, it's that Bitcoin becomes the bridge enabling China to sidestep the dollar. China has begun pushing a dual asset strategy: the digital yuan for surveillance and domestic control, Bitcoin for an international settlement, where discretion, neutrality, or secrecy is required. This does not mean China embraces Bitcoin ideologically. They are leveraging it strategically. And this hybridization creates a system the United States cannot fully monitor or stop. Reports suggest China is approaching oil exporters, sanctioned governments, and developing nations with proposals that involve commodity trades partially or fully settled in Bitcoin, not because they want to hold BTC, but because doing so weakens the US dollar's chokehold. Even more concerning for Washington is China's push to create a network of Bitcoin reserve-sharing agreements with countries that currently rely on Chinese financing. These agreements allow China to operate as a liquidity hub, providing BTC to allies in exchange for political alignment. This transforms Bitcoin into a geopolitical weapon when China can deploy without controlling the blockchain. All they need is influence over the holders. The final and most secretive piece of China's counter-strategy is the Strategic Accumulation Directive, a confidential initiative believed to involve long-term acquisition of Bitcoin through dozens of channels, none of which can be directly tied to the Chinese state. Instead of buying BTC on open markets, where the US could track it, China may accumulate through mining expansions, offshore sovereign wealth fronts, state-affiliate exchanges in Hong Kong, and global shadow banks already operating within its sphere of influence. China does not need to beat the US in total Bitcoin holdings. It just needs to accumulate enough to prevent the US from establishing uncontested dominance. But Trump's order did not only trigger a Chinese response, it triggered anxiety across Europe, India, Russia, and the Middle East. Nations that previously ignored Bitcoin are now reassessing it as a strategic necessity. Countries that were skeptical are now planning reserves of their own. Allies of China are exploring mining expansions, and countries under US sanctions see Bitcoin as a way out of economic suffocation. The monetary landscape is shifting faster than analysts can calculate. America wanted to lead the new financial era, but by acting first, loudest, and most aggressively, it may have pushed the world into a race it cannot fully control. China's counter-strategy is not built on ideology. It is built on pragmatism, leverage, and survival. The CCP understands that power in the 21st century does not come from territory or armies. It comes from controlling the systems through which value flows. When the United States weaponized the dollar, it gained global influence. Now it wants to weaponize Bitcoin to maintain that influence into the future. China's response is designed to prevent exactly that outcome. And this is why the world is now entering a level of financial confrontation unseen in modern history. Two monetary systems, two visions of the future, two global powers, each using Bitcoin not as a store of value, but as a strategic instrument. The United States wants domination, China wants insulation, and every other nation wants options. Bitcoin was never supposed to be part of geopolitics, but today, it is the most important piece of the global power puzzle. China's counterstrike is underway, but the world has not yet seen the final phase, because the most aggressive part of the strategy, the part that threatens global stability, begins next. And when it starts, the United States will be forced to respond. China's counter-strategy did not end with accumulation, mining, consolidation, or reserve alliances. Those were only the first moves in a long game, because what happens next is far more consequential, far more and far more threatening to global monetary order than anything the world has seen in decades. China knows that the United States wants to cement dominance over both the old financial system and the emerging digital system. Beijing understands that if it fails to act now, it may never have another chance. And this is where the conflict moves from preparation to escalation. The first element of the escalation revolves around liquidity sabotage. China understands a fundamental truth about Bitcoin. Unlike the dollar, Bitcoin has a finite supply and a slow issuance schedule. Every BTC purchased by one nation is a BTC that cannot be purchased by another. Power does not come from how much Bitcoin you own. It comes from how much you prevent your rival from owning. To execute this, China has begun mobilizing sovereign wealth funds, corporate proxies, and privately controlled state-aligned entities to quietly absorb Bitcoin from fragmented global markets. OTC desks, private brokers, distressed exchanges, insolvency liquidations, and high-net-worth sellers have all become targets. China is not chasing price. It is chasing scarcity. The goal is to slow down America's path to 1 million Bitcoin by constraining supply at every available choke point. The second escalation involves influence operations across the developing world. China recognizes that Bitcoin adoption is not only about reserves, but about the ecosystem that surrounds those reserves. If the United States builds a dominant global Bitcoin network that settles international trade, it gains an entirely new layer of power. China cannot allow that, and so Beijing has begun approaching nations within its Belt and Road sphere, offering a new proposal. Join a China-led settlement network that uses a combination of digital yuan, Bitcoin liquidity support, and commodity collateral. In this structure, countries bypass the dollar, not through ideology, but convenience. The digital yuan provides speed, Bitcoin provides neutrality, and China provides stability. Nations with weak banking systems find this irresistible. For them, it is not about choosing China over the United States. It is about choosing a system where they are not vulnerable to sanctions, dollar shortages, or political pressure. This growing network increases China's leverage and weakens America's influence without Beijing ever having to publicly challenge Washington. The third escalation is regulatory warfare. China knows it cannot control Bitcoin directly, but it can influence how the world perceives American dominance. Beijing has begun pushing narratives across emerging markets, arguing that Trump's executive order is not about innovation but about control. The claim is simple. If the United States accumulates 1 million Bitcoin, then Bitcoin becomes an American asset, no different from the dollar. This message is spreading through Africa, Southeast Asia, and parts of Latin America, regions already wary of Western financial oversight. The more countries fear American control over Bitcoin, the more they lean toward China, is a dual system. China understands that power often comes from perception, and this narrative is a powerful one. If Bitcoin becomes a symbol of American dominance, then China automatically becomes the counterbalance. The fourth escalation is the buildup of institutional firepower. While the United States has Wall Street, China has state-owned giants, massive entities like China Investment Corporation, State Administration of Foreign Exchange, and the Big Four state banks have begun building internal frameworks to integrate Bitcoin into their long-term planning. This does not mean they are buying publicly. It means they are preparing structurally. Accounting frameworks, collateralization systems, risk models, cross-border liquidity pathways, all being quietly built behind closed doors. The goal is simple. Be ready for the moment Bitcoin becomes essential to international finance. And when that moment arrives, China wants to be fully operational. The United States has the advantage of early action. China plans to have the advantage of infrastructure. But the most dramatic escalation is the fifth one. The operation insiders call the liquidity fracture. This is the most important part of China's plan. The most dangerous, and the operation is built on a simple but powerful observation. If the United States wants to use Bitcoin as a strategic reserve, it needs predictable liquidity, deep liquidity, and global liquidity. A strategic asset cannot function if it becomes unstable or unreliable. China aims to make Bitcoin liquidity unpredictable for the United States by encouraging accumulation spikes, withdrawal waves, custodial fragmentation, and geographic decentration. In short, by making the Bitcoin market harder for the United States to control, the more fractured the Bitcoin ecosystem becomes, the weaker the U.S. strategy becomes. This could involve supporting alternative exchanges, offshore liquidity hubs, decentralized custodial networks, and cross-border Bitcoin facilities, controlled by Chinese-aligned partners. This is not about destroying Bitcoin. It is about preventing the United States from mastering it, and this brings the escalation into its final stage, the global divide. Because the world is now seeing something unprecedented. Nations are beginning to choose sides, not based on ideology, territory, or military alignment, but based on monetary strategy. Countries that fear American sanctions lean toward China as a dual system. Countries that distrust Chinese surveillance lean toward the United States. Nations caught between the two begin building their own Bitcoin reserves out of fear of being left behind. And this creates the most chaotic monetary environment in a century. A world where Bitcoin is no longer a store of value, but a geopolitical battleground. A world where the two largest superpowers are competing not for land or resources, but for control over the future of digital scarcity. A world where nations are not aligning with allies, but with monetary systems. The United States did not expect this. Washington believed that, by acting boldly, it would shape the future. But China's response has created a dynamic where dominance is impossible. Uncertainty is structural, and global stability is fragile. If the United States accelerates its accumulation, China intensifies its resistance. If China expands its alternative settlement network, the United States pressures allies to reject it. Every move by one superpower triggers an equal and opposite move by the other. This is no longer a competition. It is a currency war. A silent war. A war fought through reserves, settlement networks, market liquidity, and strategic diplomacy. But here is the truth that no government wants to admit. This war does not end with a winner. It ends with a new monetary system, a system where Bitcoin plays a central role not because any nation wants it to, but because no nation can afford to let their rival control it. Bitcoin was designed to be outside government control, but now it is being shaped by the actions of the two most powerful governments on Earth, and that tension will define the next decade. As the conflict escalates, markets will experience volatility, unlike anything in recent memory. Breakdowns in liquidity, surges in demand, cross-border capital flight, currency instability, political realignment, and economic consequences that will shape the lives of billions of people. The world is watching two superpowers race into a future they cannot fully understand, using a technology they cannot fully control, in a battle that neither can afford to lose. The United States fired the first shot with Trump's Bitcoin executive order, but China's response has shown that this is not a race America can run alone. This is a global shift, a structural realignment, a transformation of the world's financial architecture. And the true consequences of this conflict will not be measured in Bitcoin price or reserve numbers. They will be measured in power, influence, and the balance of global stability. The currency war has begun, and now the world waits to see which system will define the future.